Well, we'll take stock of how global markets have done over the last day or so, and we'll start off with key events. Of course, one was that the Fed chair, Mr. Jerome Powell, addressed the Senate, and that meant that he testified and spoke about how he views inflation as well as macros in the US. He spoke about rate hikes likely to begin in the month of March, despite the highly uncertain impact of the war on the US economy. And he also suggested that inflation is indisputably too high and labor market is extremely tight. So he spoke about these 3 to 4 points, and that looks like the cues are headed towards a rate hike, but a more tempered rate hike than what was earlier anticipated before the 15th of February, after which the Russia-Ukraine events started to escalate. He also said that there is going to be a cautious approach. He signaled caution and said that they will proceed with the rate hike, but proceed carefully. He also said that there's a 3-year plus buffer to normalize the balance sheet, which also he indicated will contract. Of course, there was an employment report which came out on the corporate or the private jobs data, which came in better than expected. The overall employment report is expected to come in on Friday. Of course, volatility in markets has been extremely high over the last 2 months or so, and that seems to continue. Day before yesterday, markets tanked, especially in the US. Yesterday, markets saw a bit of a recovery. The Dow, S&P 500 and the Nasdaq, all three indices were higher in trade yesterday. The Dow was up 1.8%, the S&P 500 up almost 1.9%, and the Nasdaq up 1.6% or thereabouts. When we look at Europe, the story was no different. Stocks rose despite intensifying geopolitical environment at the moment. The DAX was up around 0.7%, the FTSE was up around 1/3%, the CAC 40 was up around 1.6%, and the Stock 600 up a more tempered 0.9%. Moving quickly on to how Asia is looking an early trade today. Well, pretty much all green when I look at the Asian markets at the moment. The Nikkei is up around 0.7%. The Shanghai is up around 1/3% or so. The Hang Seng also up 0.75%. The ASX 200 up around 0.75%. The Kospi up around 1/3%. So pretty much all in the green at the moment. When I look at the SGX Nifty, that too is headed for a higher start. It's up around 1/3% in early trade today, which means that it will be above that 16,600 mark if we go as per the latest cues. So that's a good positive when we look at it broadly. In fact, when we look at even the Dow futures, they were higher in early trade today. However, that's come into the red, just marginally into the red, clinging on to some amount of a loss, around anything between 1/4% to 0.07% in early trade today. The Dow, S&P and the Nasdaq futures, all three looking marginally in the red as we speak. Moving quickly on to commodities, well, oil has really hit it out of the park, above the $110 mark. It's back at the levels it was at more than 10 years ago. 2011 levels, in fact, is where oil is standing at the moment. It's at around $113 a barrel as we speak, and continues to go higher. When we look at gold, that's pretty stable at around $1,932 an ounce at the moment. In terms of bond yields, well, the Fed commentary has affected bond yields, and that meant the bond yields have gone higher. So bond yields currently at 1.86%. That's a strong 10 basis point rise over a day or so. Very strong rise from bond markets, which means, or rather which is largely led by the Fed commentary, is what we believe. Lastly, moving to crypto, well, Bitcoin pretty much at that 44,000 level, just below the 44,000 US dollar level, so just above that in trade yesterday. So broadly in that range at the moment as we see it. Broadly positive cues coming out from global markets, and it seems hopefully like a positive start for India as well, hopefully today.